Hello everyone, welcome to the Ichimoku daily analysis for the Aussie dollar US dollar FX for Wednesday, December the 7th, 2011. Well, the change of trend today, a candle that's made a higher high and a higher low and a green bodied candle. So for today's trading, we had the first day in the previous 4 days that has turned green in terms of the body of the candle, and that denotes the buyers making net bullish progress as opposed to the sellers making net bearish progress for 3 out of the previous 4 trading days, with a doji type candle in there, a very indecisive type candle. The buyers have closed with control for today, and they've shown some solid commitment to taking this market higher. They did lose some commitment, however. We can see the small shadow on the top of this candle, so it is a little bit indecisive, but the buyers have taken control, and some good strong control. Today we've also seen the market break out up above the cloud and close up above the cloud. So that's a bullish signal in Ichimoku charts terms. So there is good potential for this market to trade higher and continue with this move to the upside. Having said that, however, we do have strong resistance overhead, and we can see the solid downside price rejection as the market tested up around this 103.28, 103.30 level, and this resistance extends from around the 102.80 level up to there. So very solid resistance. It coincides with roughly the swing high around here, around 103.50. And we also have solid resistance extending up to around the 104.50 region. So there's some good solid resistance overhead, but then very solid support down below as well. The cloud will offer itself as strong support, as we've seen on the previous 4 trading days, where the market attempted to sell off but found support within the cloud, with the sellers losing commitment around this area. And this support from the cloud extends all the way down to about 1007. Below there we have obviously solid support at the round number 100, and then support just below there at the 99.96.5. Now we do have some sort of a pattern forming. We have a previous uptrend, and for every pattern that we have, one precondition for all of these patterns, one common precondition is that we have a trend. And here we have a solid uptrend. If we don't have an uptrend or a downtrend, then we don't have any patterns that are forming. So we have the uptrend, we have congestion now, and we have the market forming a series of lower peaks and lower troughs and higher troughs, within this pattern. So it's some sort of a symmetrical triangle, pennant, not quite the flag, because the flag boundaries would be a little bit more parallel, but a pennant symmetrical triangle type pattern, perhaps not a wedge type pattern. So if this is a symmetrical triangle, they tend to be continuation patterns. They can be reversal patterns, so we do need to watch the boundaries either side of this pattern for a potential continuation to the upside or to the downside. For the symmetrical triangles, the target for these patterns is the distance between the boundaries at the widest point projected up or down from the breakout. If this is a pennant, and it is a little bit too big to be a pennant, pennants tend to be a little bit smaller and a little bit tighter in range, but if it is a pennant, the target would be the measured move, which would be the distance from the move into the pattern projected in the breakout. And if it was a pennant, it would tend to be a continuation pattern to the upside. But the most important thing, however, is that we do have a congestion area, regardless of what we want to call it, and we do have boundaries above and below the congestion area, and what we want to do is wait for the breakout. So obviously we'd be a little bit worried taking a trade based on the breakout to the downside, because we do have solid support still down below, extending down to this 1007 region because of the cloud. To the upside, however, we don't have any cloud to limit the move, but we do have strong resistance overhead. So perhaps you wouldn't feel as confident because of the close by resistance around those levels that we mentioned earlier, but you probably would be a little bit more confident of a breakout to the upside gaining momentum rather than the breakout to the downside. So in Ichimoku charts terms, bullish in the overall big picture terms, and a bullish market in the medium term and fast term timeframes as well, by trading up above the Kijun Sen and the Tenkan Sen. Next, moving on to the Euro US dollar, and we see here that we have had a change of trend today. Previous day's trading, we had a candle that made a lower high and a lower low on an indecisive spinning top type candle, and that did set the market up for this potential change of trend. Today a candle has made a higher high and a higher low, but on a spinning top type candle, so indecision as well. Very indecisive trading in this market over the previous few trading days. Certainly not the way that you'd like to see an uptrend established, with a lot of indecision and the buyers losing commitment, neither side really taking control of this market. So that does raise some concern about the potential for this market to continue in the trend to the upside. Having said that, however, we don't have any evidence that the trend will change at the moment, because the sellers also lost commitment as they were tested down below the Tenkan Sen. The Tenkan Sen here is very important for this market. We can see that we've tested on 1, 2, 3, 4 occasions previously, and we can see the sellers have lost commitment on each occasion. So that is a very, very important area of support for this market. If we do eventually see a bearish breakout below there may be potential for the market to trade lower and test lower support areas down around the 132.59 area or the 132.09 area. To the upside, however, we can see the large shadows on the top of these candles, and that represents the buyers losing commitment up around this zone of strong resistance, and it extends all the way up to around 135.47, and then even further up to this swing high around 136.11. So very strong support down below, very strong resistance overhead. In Ichimoku charts terms, the market is bearish in the long-term and medium-term timeframes by trading below the cloud and the Kijun Sen, but now bullish in the fast-turn time frame by trading above the Tenkan Sen. But we haven't had a very convincing breakout up above that Tenkan Sen in the fast-term time frame. So the buyers have really failed to monopolise on the breakout, and they're not really showing any strong momentum to the upside in the fast-term time frame. Looking at the Chica span, that's down below the corresponding price action, confirming the bearishness that we're seeing in the long-term and medium-term time frame, but certainly we now do have potential to see retracement back towards these higher levels, because we're trading above that Tenkan Sen, but unconvincingly so. So obviously for the next day's trading, the area extending down to around 133.31 is very important, and then the area around the high of the current candle, which is at 134.5, for a potential to test within this zone of strong resistance.